Good morning, everybody, and welcome to the Ankerstar Wealth Morning Update, and welcome to April. No show yesterday because I was in travel status, but goodness, what a start to the second quarter. If you like the color red, you liked yesterday, and you'll like it even more today after a great first quarter, up 10%. We've talked about that. Starting to see a little selling this quarter. We're going to talk about that a little bit today after our transition to Mike. But before that, I want to talk about something else that's on everybody's mind, and that's, of course, the tax filing due date is coming up. Don't be shy. Feel free to. That's why we're here. Yes, I have not been able to answer your questions as expeditiously as I'm used to, but we're getting caught up this week. But if you have tax questions, now's the time. Ask those questions. And one of them is, hey, Steve, have I contributed to my 2023 IRA? And we're going to talk about the rules that apply for that. So that's how we're going to start the show. Then I'll transition to Mike for some talk about market volatility. Is everything over for 2024? Maybe, maybe not. Mike will help you sort that out. And then, of course, the remaining bracket for Stock Madness, we're down to 32 teams in the next 32 stocks, I should say. We're going to get half of the Elite Eight established from today, but from yesterday's results, and the other matches are going on today. So Mike will carry us into that next phase of a wrap up of our competition. But before we begin, it's a financial education presentation. You have to do your own due diligence before acting upon anything in this presentation. More disclaimer information is available at ankerstarwealth.com, and the opinions expressed in the show are Mike and mine alone. With that, let's go ahead and get started with those IRA contributions. What are the rules? All of that stuff. So here's your limits. If you go to Investopedia, which is one of the best sources out there, tells you that the 2023 limits, again, are 65 and 75, depending on whether you are under or over 50. So again, you have until April 15th if you haven't done your 2023 contributions yet. Even if you've started your 2024 I'm just running you through all the topics I've answered in the past week or so. So even if you've already started your 2024 plan, you can still go back and do the catch-up contributions for 2023. Another question that I've had is, what if I haven't done anything? Can I start an IRA and fund it for 2023? And yes, you can. Now, if you're in that situation, please start today, because it does take us a hot minute to get the account open, the paperwork done, and all that for you to be able to do it. But yes, the answer is you can do that even if you haven't done anything. They're like, well, I work. How about my spouse? Yes, you can open a spousal IRA as long as one individual has enough money, makes enough earned income, which is normally the case, to be able to cover the contribution for both. So even if your spouse, like in my case, Irene is a non-traditionally working spouse without earned income, she contributes to her IRA every year through a spousal IRA. So don't let that slow you down for saving for retirement. And next, what if you've already filed your taxes? Well, if you didn't mention your IRA in your taxes, then yes, you'll need to file an amendment, which if you do H&R Block or TurboTax is no big deal at all. If you're going to somebody local for your CPA, they're going to charge you a few dollars for that. But generally, the savings that you will get from taking care of your retirement will offset the cost to have to file that amendment. So if you're like, dang it, I wish I would have done it, don't put it off till next year. Let's get you all set up for this year, and then of course, next year going forward, you can be on a better schedule there. So those are kind of the things that people have been asking me lately. Again, if you just don't know, reach out to us and ask. We'll look it up for you. IRAs are notoriously confusing because sometimes when you contribute, you have to identify which year, and that's not often easy to figure out. Let our team of experts dig through that. It's painful, but we're happy to do it for you. All right, and then once April 15th passes, you're off into 2024 numbers, which is easy because there's not two sets of numbers, because now it bumps up to 7,000 and 8,000. You don't often find errors in Investopedia, but there's one right there, because it is actually 7,000 and 8,000, not 7,500 and 8,000. So always reach out if you have any questions on anything. All right, Mike, we've had some volatility in the market since we've had these 2 trading days of April. Tell us a little bit about market volatility and what to expect.
Yes, it's been an exciting first couple days of April after the first quarter. S&P overall up 10%. Everyone's like, yay, that's fantastic. we a lot of times we say we're going to make 10 to 12% a year. Wow, we hit 10 and we're ready to go home. I guess some people may be, because there's quite a bit of selling the last couple days. You're seeing it across the board. It's not just one specific industry. Should we expect volatility the rest of this year? Yes, of course we should. We should expect volatility every year, because that is the stock market that we're a part of. To get higher gains, to make these good returns, this is the downside. We get a lot of volatility, a lot of movement. If we just wanted to put it into a CD, it just goes up nice and slow, but very slow. So this chart that I'm showing here is one of my favorite charts for showing the effects of volatility. So what you're seeing here across the top, mostly the top, the blue, that is the gains of the S&P 500 just overall since 1980. Very good. You can see there's some down years where it says negative, but you can see generally the numbers are, I think I want to say it's 31 out of 40 are up, something like that. The kind of the yellow orange line that goes down, what that is the intra-year drop. So for example, last year, the S&P 500 made 24%. That sounds great. You may have forgot that at one point it was down 10% from the high in the middle of last year. And you can see this all the way back. Even take a year like the COVID year of 2020. The market dropped 34%. You can see that down 34%, but at the end of the year, it was up 16%. I think people maybe remember that drop a little bit more there. So when I look at this year, this first quarter, which is accurate, and I should give credit, this comes from First Trust, provided this graph here. First quarter, we were up 10%. The most it had ever dropped this year was 2%. And if you look back for the past 40 years, there's never been a year that it was only down 2%. So the odds of that continuing, probably slim to 1 in 40. So very unlikely. We're going to expect volatility. Well, certainly as the what I call the Fed, when are they going to lower rates? When are they going to lower rates? We hear this conversation all the time. They're projecting it, trying to guess which meeting. Is it in June? Is it later in the year? There's going to be a lot of, I call them tantrums. Like the market, like we want it as soon as possible. We want this candy burst as soon as possible. And the Fed says, no, you must wait. And the market reacts. It throws a tantrum and goes down a little bit. So anyways, throw in presidential elections. I wouldn't be surprised if we hear the topic of tariffs come up. These things can have the market react negatively. So anyways, just thought I'd show this. Another chart that I like is this one here. So I did see like a missile was launched a couple days ago. It hit somewhere in Iran, and maybe the market goes down. But when these geopolitical events occur, now one did not occur today, so that's why I'm bringing this up now. You can see that the market tends to sell off. We don't know when they're going to occur because we have no inside knowledge to this type of thing, but the market sells off a percentage, and then on the right it shows how many days it takes to recover. The biggest one was in 1973. I was very young at the time. I certainly wasn't driving where I cared about oil, but at least as of recent, let's just say the last 20 years, generally the market recovers back in less than 30 days. So just when that next political event happens, which it will, just something to expect. Now to the fun stuff. This was all the, let's get to the fun stuff. So before I'll start off by saying, coming in after the first 32 matches, Mr. Steve and Russ had perfect brackets. They had not missed, but their dreams need to come to an end. So they did go down. So unfortunately for Steve, he lost his bet with Eli Lilly, which we're going to cover, and Russ lost Uber. He had taken the number 16 Uber, but we can see it. What I've done for the Sweet 16 is I've added names in there. So now we know who's going where. So so number 8 Netflix, picked by Trisha, knocked off 16 Uber. Number 13, Russ is still alive, though. He's got number 13 T-Mobile advances. Number 3, Taiwan Semiconductor by Jim, going against number 10, SAP. Nobody has taken them. Number 1 seed in the Steve Jobs division, Advanced. Look at all the people that still love their Apple, at least their Apple products. Kelly, Steve, Spencer, and Irene. And they're facing off against number 4, Walmart, with Trisha having a second Sweet 16 team, and Kelly. Kelly actually has both Apple and Walmart, so we know she's going to advance. And then number 11, Disney. No love for the mouse. Nobody picked Disney. And then number 2, Berkshire Hathaway has Pat. So those are the first Sweet 16 teams. And later today, just, quick highlight. Let's see. Tesla is going against Procter and Gamble. I think I saw Tesla miss deliveries. I don't think Procter and Gamble's down 5 or 6%. So I have a feeling at this moment Tesla's going to go down. Number 2, Meta's in there. Google going against Adobe. I know Spencer has Adobe, and some other ones, Verizon, Johnson & Johnson. So we'll have the update tomorrow, and we'll have our full Sweet 16 bracket. That's all I have for today. Thanks.
All right, appreciate it, Mike. So everybody out there, again, couple of ugly days in April. We don't just take our football and go home, as Mike said. So hang in there through this volatility, and we will be back with you tomorrow morning. Have a good one. Bye.